The miners have given us a case study of, or a proof of concept. Everybody that was a bit hesitant about the miners got a lesson, or got taught a lesson in the last 3 months. It sounds a bit aggressive. I've worded it too aggressively, but there was a proof of concept. If you weren't a believer in the mining stocks, fine, you missed the first 30% or 35%. I think GDX is up 35% roughly right now. So you missed the first 35. And if you think that's enough, that's done, everything's priced in, then stay out of it. But the miners have a lot of room to go. You just pointed out the reasons why. Costs have been flat. Oil prices have been low. They should be printing cash.
Welcome back to Metals and Miners. I'm its founder and its host, Gary Boehm. Today we have a wonderful discussion lined up, and we're fortunate to have with us KAI HOFFMAN. KAI is the host of Soar Financially on YouTube, where they discuss the macro to understand the micro. He's also the co-host of Gold Newsletter on YouTube alongside Brien Lundin. He's the junior mining guy. KAI has over 10 years experience as a consultant in the capital markets, where he has worked with more than 100 companies. KAI, thank you so much for joining us today.
Gary, thanks so much for having me on. It's great to be with you today. Appreciate it.
All right. Well, KAI, let's begin with the macro to understand the micro. What is your analysis of the current markets and the economy?
Yeah, no, I appreciate that. And it's not as easy as it might sound. And or it's not as straightforward. Of course, everybody's got their own perceptions, but the markets are in a whirlwind. Like we're seeing a very bifurcated picture right now. The stock market is rallying, commodities are or doing well. Copper has been on a tear, gold has been running, even silver is catching a bit, but the underlying economy is not doing as well, and it's propped up by artificial money. I think we all know that. Depending on the source you want to believe, there's trillions of dollars that flowed into the economy, not just in the US, but globally, and we're returning to that quantitative easing scenario again, just by reducing interest rates and maybe potentially, untightening some of the QT here in the U.S. There's massive stimulus happening, massive deficit spending. We all know the numbers, $2 trillion this year alone. That is super inflationary usually, or it should be super inflationary, but it's not. And I have a hard time describing it because it's not textbook, right? So it's something we haven't seen. It's unprecedented is the word I was looking for. So the economy is askew. You look at it depending on where you are. Like some of the craftsmen are struggling. There's not enough free cash for the lower income groups available right now. It's only the bigger, what do you call it? Like the white collar workers are doing okay, not great. We're seeing layoffs across the board. Unemployment is rising, and that is across the board as well. Companies are moving away from certain cities. We've seen Google just closing a couple of their offices in San Francisco again this week. So there's a lot of movement in the sector. It's really tough to really pinpoint it, and it really depends a little bit on who you talk to, right? As well, is there a recession? Officially, no. Of course, recessions only get confirmed afterwards, and we'll find out. Maybe in 12 months, we'll be a lot smarter. But so far, we're not there yet. We have a worsening picture, but it's not been confirmed, right? So, of course, everybody has their own description of it, and it's really tough to pinpoint. On Soar Financially, we hear a lot of different opinions as well of where we're at, and probably going to get a lot of hate in the comments for saying we're not in a recession. It's like, oh, don't you see the signs? Like, well, there's signs, and unemployment is rising, but we're only at 4.2% unemployment rate in the U.S. Let's keep the lid on. Of course, we're trying to sensationalize everything. And I'm personally in the camp that things are getting worse. Like, it's not honky-dory out there. And I'm seeing it here in Germany firsthand, where Volkswagen has to lay off 30,000 people because we just bet on the wrong horse, right? And the ESG narrative and the energy transition that we've promised everybody is not working out as we intend to. It's costing us a lot more money than we all envisioned. My energy cost is 37 cents a kilowatt hour. We're just not competitive. Right. And that's what we're seeing. And I think that's why the global economy overall is on very, very shaky footing. And China's stimulus package, I think, tells you everything you need to know.
Well, so this is a great launch pad. So the Fed cut by 50 basis points last week. China has dropped historic stimulus. They've been easing since. In fact, many central banks around the world, they're easing at a time when markets, real estate, food prices, and more, they're at all-time highs. How do you see this current easing cycle playing out over the rest of 2024 and into 2025?
Yeah, let's start with the Fed. They've announced 50 basis point cut. They will cut another 50 basis points. But Jerome Powell, apparently not as data independent as he wants everybody to be, or data dependent as he wants everybody to believe, is already forecasting 25 basis point cut at the next meeting in early November, right after the U.S. election. So he doesn't look at the data. So even if everything's get worse, he pretty much says like we're going to cut by a quarter basis point. So not really data dependent. We'll see if that changes. We get a lot of data points until then. So let's see if he has to eat crow. We're going to cut in the EU. We're going to cut another 25 basis points in the EU as well in October. I'm not sure how that's going to play out until the rest of the year, because officially Germany is experienced negative GDP growth, and we could definitely use some stimulus, quite honestly. Not sure where we would put it, though, because incentivizing people to buy EVs, I think, was not the right incentive, because it hasn't it led to anything valuable, meaning like we haven't created any value because Volkswagen bet on the wrong horse, having to lay 30,000 people off because there's not enough EV interest, right? And then, of course, China stimulus as well is a massive package. So yeah, where do I see the rate hike cycle? It's going down. I'm not sure what the target rates could be in the next 12 months. Personally, it really depends on the overall economic picture. Just today, as we were recording, we're seeing a massive macro event happening, play out in front of our eyes. It's Iran attacking Israel. Apparently, over 5,000 rocket alerts over Israel right now as we speak. So tough to make a prediction in that regard. If that is an event that needs to be priced in, then maybe we'll be at 3% in 6 months in the U.S.
So markets, real estate, food prices, and so many other prices, they're at all-time highs as they're easing. Do you see inflation, another inflation wave coming our way?
So people are telling me that we're going to see that. Unless we pump more money into the economy, I have a hard time believing that, personally. Like, yes, everything's is more expensive, but wage growth is slowing down a bit. It's not at 5% anymore. It is coming down everywhere across the board. So I think we're going to see more of a stabilizing trend. I see inflation around the 3% mark personally. I think that might be the new norm. It's come down in Germany to 2.1%. So we're in that target range. And U.S. strike, like as I said earlier, it's not as easy to predict the economy. We just got a strike with the U.S. longshoremen on the East Coast this morning as well. What is the impact there? Like if I were to look at the U.S., potential supply disruptions, higher inflations, whatever I'm saying with the 3% might be out the door tomorrow. Because if they can't agree on a new contract and there's a prolonged strike, all bets are off again as well. Another black swan event that's playing out in front of our eyes here that nobody really had on their bingo card for 2024. It's the first time actually last 24 hours I heard about it, that there's even discussions about a strike, right? So it's really tough to make a prediction. If everything was normal, we wouldn't even have that discussion. But as I said, new paradigm. It's tough, quite honestly. But I think we're going to see more stimulus. And if we enter wartime economies, if World War III breaks out, because it could easily happen. Russia is tied so closely to Iran. We don't know if Israel is going to retaliate, how they're going to retaliate, or how much of a how do you call it? Like window dressing the attack is that Iran is leading right now. I don't have all the details. It's just happening right now. They've done that before where they attacked, but it was more, we had to do it to save face, right? And the Iron Curtain, or not the Iron Curtain, what's their rocket system? Pretty much caught all the rockets, and that was the end of that discussion, right? So not sure if it's just a show of force or if there's more to it, and we'll have to find out, sadly.
So Kai, you interview a lot of experts on your channel, both in the mining space and in the economic and financial spaces. What is the general sentiment you're getting from your guests as it pertains to the economy moving forward here?
It's overall negative. In general, maybe it's because we talk gold a lot. We like talking commodities, so you need to have a bit of a doom and gloom outlook if you love gold. And over the last 12 months, we've been absolutely spot on. It really depends. Like you'll find a statistic that fits your narrative, right? So it really depends a bit on the guest. Of course, we try to have a few guests on that are positive, that they're like a Darius Dale or so, like really good predictions. They've been right the last 24 months about the S&P hitting new highs, while all of us are saying, well, the economy's in the dumps. Well, the market didn't care. Right, the market is flying. AI stocks have been flying, and Darius Dale was the one who pointed me towards like wage growth, inflation, or wage growth, because the consumer keeps spending, right? Yes, consumer debt is going up and not everybody can afford it anymore, but we're seeing 5% wage growth in the US, for example, and that is keeping up with what we're seeing on the consumer spending side. So the consumer can keep spending in that regard, and that's something he's pointed out. So there's always a narrative that or a statistic that fits your narrative, right? And it depends on who the guest is. Of course, you'll get both sides, and we try to be somewhat neutral. As you can tell, I do have my opinions, of course, as well, and but it's overall negative. Like all things are pointing towards a recession. It's but the money that has been pumped into the system is completely letting everybody miss their timelines and time for forecasts in terms of timing, which is unfortunate because then everybody will say, well, even a blind squirrel will find an acorn at some point, but right, even a broken clock is right twice a day. So all those euphemisms and analogies come out, but like I've been forecasting a market crash for the last 10 years personally. Like I've been cautious investing in blue chip stocks because the money printing just didn't make any sense, like the economic system. But so far, we're just kicking the can down the road. And my biggest fear, and I might have said that before, is that we're just going to continue to do so. Right?
Yeah. So the U.S. Treasury, they expect a $16 trillion increase in public debt between 2024 2034. So we're talking 10 years, 16 trillion, very conservative number. I'm sure that number is going to get blown out of the water. But anyway, it's going to take it to over 50 trillion from where it is now. And that is without taking into account any recession risk. So we haven't really had a recession since 2011. And this is predicting another 10 years from now that no recession. This has never happened before. But anyway, if there's a recession, debt clearly goes much higher. In your analysis, what risks does this massive mountain of debt that could never be repaid pose to the economy and really globally?
Well, that's a very good question. I'm not sure I have the right answer for it, but the risk is like in the end is default. Like what does a reset look like, right? I think that's something we all have to think about. Is that a reality? Is that a possibility? I'd say the possibility is very, very small that a default happens because we're seeing increase in productivity. There is GDP growth. The U.S. government is spending a lot of money, as you said, the $16 trillion in deficit. It's not really effective spending because a lot of it goes just into employees and it's not creating that much value. We've been kicking the can down the road ever since. Like debt has completely exploded, $35 trillion right now, but nobody's talking about it. And I don't think anybody will. The U.S. is generating a lot of income. As well. So right now it's covered. Nobody's really worried about a default. Look at the 10-year yield. Yes, it's 3.75% or so right now, but that's not worrying territory at all. People are still buying. The bond auctions are going well from what I see. It's like they're not going great or anything. They're not being overrun and 5 times oversubscribed. But so far, they don't have to be chasing buyers for them either, meaning they have to give up the house to sell to sell their bonds and T-bills, right? I think we'll find out more next year, which could be really interesting because a lot of the short-term bills have to be renewed and reissued. I don't have the exact number in front of me, but it's a big amount that needs to be refinanced next year because a lot of it was just issued on short-term debt basis just the last 12, 24 months, and we'll have to chew through that. I think that'll be an indication. We'll see where the foreign players are. That'll come in, how the yen carry trade is developing. The Japanese economy plays a big role in it, so we'll have to pay attention to that. The yen carry trade was sort of what set us off August 5th for that Black Monday, some people called it, right, where we've seen a bit of a flash crash in the markets, gold as well. But it recovered quickly. That was a storm in the water glass for now, but it showed what could happen if things really hit the fan, and we'll have to pay attention to that. So a lot of factors going into it. Personally, I'm not too worried about it right now. Nobody seems to be. But there's always the risk of default, which I don't think that'll happen. U.S. is world reserve currency, and they have the largest army. They will do everything to protect that status. And before it gets devalued, before we see a financial reset, I think we're going to see a lot worse.
So, Kai, gold, it's gold. It has no froth. In fact, there's barely been even a whisper in the news about its rise. It's the best performing global store of value, and it keeps reaching new all-time highs. I think it's closing in on 2,700, somewhere close to it, and it's likely on the way much higher. Why is the media, hedge funds, advisors, and just about everybody else in the financial world so silent about gold?
That is a very good question that I'm looking for an answer to myself. I posted that on my X feed as well. When gold hit 2,700, I saw one small headline on CNBC. You had to scroll down on Bloomberg to see anything. I don't think Financial Times mentioned anything. It is puzzling. I have no idea. It leads me a bit to conspiracy theories, quite honestly, because I'm trying to come up with a rational, explanation, and I can't really come up with one. But I remember in general, we've been talking about, it's like, oh, if gold hits 2,000, the US is burning, right? So I'm trying to figure out, okay, coming from that angle, so we're at $2,700. Are we trying to cause or trying to keep fear to a minimum? What does that mean? You can look at who's buying gold. It's all Eastern countries. Besides Poland and Ireland, nobody in the EU has bought. Nobody in the Western Hemisphere has really bought any gold. Saudi Arabia just took delivery of 160 tons. There's a big BRICS meeting happening at the end of this month as well. So, which could be quite decisive. So the question is, it keeps leading me to conspiracy theories that there's a bigger ulterior motive not to talk about gold. Because if all of a sudden the generalist retail investor starts running into gold, starts buying up ETFs, and we've seen ETF inflows, by the way, as of August. I haven't seen the September number yet. We're recording this on October 1st, so probably have to wait a few more days. But if that happens, if the generalist investor starts pushing into gold even more aggressively, it might run away. It probably causes more recession fears. The U.S. will struggle maybe to refinance. There's various scenarios, because the question is, what does that mean to the U.S. for the U.S. dollar then as well, sort of as a counter trade. And I think we'll break down the 100 level on the Dixie if gold keeps rallying, because right now gold has been rallying despite a decently strong U.S. dollar. But gold wants to break down. Just looking at the chart, not a chartist, but I look at it, and I look at the Dixie chart, and it keeps touching on that 100 level, keeps bouncing off. But gold has been also bouncing off the 2080 level 4 times before it broke out to the upside. So if the US dollar breaks down, then gold could run really, really quickly and accelerate, and people will look for returns, and they will pile into gold and the gold trade.
Well, let's stay on gold, and let's talk a little bit about the BRICS here. As you were just mentioning, total global gold production is estimated to be about 4,130 tons this year, of which about 60% of that will either be produced in or imported by the BRICS. Net of a very small export, about 55% of all new and old gold supplies available to the markets, they're going to be absorbed by the BRICS. What impact is the BRICS having on Western nations as gold is moving literally west to east?
It is another great question, because it is tough. Of course, we're trying to interpret what the thought process is here. Why is the East piling up gold? One trigger, obviously, was the weaponization of the US dollar and the SWIFT monetary system, where the Eastern nation says, well, we can't play that game. We need to secure or protect ourselves a bit as well. The yuan is gaining in strength. I brought up the BRICS meeting. There's a discussion of a petro yuan, where more trade is supposed to be settled in yuan, especially the oil trade with Saudi Arabia and other nations in the Middle East. So I think they're trying to send us a message, because central banks are buying gold like hand over fist in the East. So they're sending us a message, hey, we don't want to play this game. We're trying to protect ourselves. We're importing a lot of gold. Thailand, Vietnam, they're adding to it. And potential gold-backed currency, if you want to believe the rumors and of the unit, which is supposed to be an Enbridge project, Bank of International Settlements is involved, 40% gold-backed. The question is, how much gold do you need for that? China right now is only 5% of global. I need to get my facts straight, but I just looked at it earlier. So 4.8% of overall currency transactions and deals are being conducted in the yuan, right? And that's up almost from 0.6% in 2010. I looked it up earlier today. That's why I have those numbers in my head. But it's been growing, and I think it's exponentially growing. And to be seen as a recognizable or a recognized currency, you need some backing. I think China is realizing that as well. They're not having all that banking prowess. I think that's a good word. Banking prowess like the US has. Everything has to go through New York. The capacity is unlimited in New York pretty much, and you see it in the bond market. And China is working on that. So what else is there? Well, the counterbalance is having gold, or having a new currency backed by gold, because quite honestly, any gold bull or any gold fanatic, gold bug should theoretically trade into that new currency, because you're trading US dollars, which is backed by nothing, just a promise by the government, into something that's potentially gold backed. Right? If you want to own Chinese yuan is a different story, but On paper, that makes a whole lot of sense. And I think that's what they're trying to create, a bit of a counterbalance, trying to be independent and setting up a second world reserve currency. That's, I think, what's going to happen. And gold might play a pivotal role in that.
There was a speech by Powell, I feel like it was back in 22, but it could have been in 23, where he was asked a question about the dollar remaining the world's reserve currency. And his response was actually pretty telling to me. He actually responded by saying, well, there's room for more than one reserve currency. So, will the dollar lose its reserve currency status? Probably not. But what's more likely? Maybe another currency of some type joining it as a secondary multipolar world, having more than one currency. So, Kai, in 1966, former Fed Chair Alan Greenspan, he said, gold and economic freedom, they're inseparable. In the absence of the gold standard, there is no way to protect savings from confiscation through inflation. In your analysis, unless folks put a decent percentage of their savings in gold, how high is this risk of confiscation through inflation over the remainder of the decade?
Oh, good point. Because I was looking into that back in 2021, 2022, when inflation was peaking. Like one of the reoccurring themes in the interviews and general discussions was, well, we're going to inflate our way out of debt. Not that easy. Germany's tried it, failed miserably, right? We had to replace our currency at the end. But you need a very high inflation rate to make that happen. And depending on the timeframes you're looking at, I believe at 8% it would have been 40 years. So you do have some time to adjust, and you can take a loss here and there, and while you figure out a strategy of how to protect your wealth. It's not going to happen overnight. I think the inflation rate needs to be like 25% to completely annihilate you personally. Yes, there's shrinkflation and other inflation factors that are going into all of this, but you won't be losing all your possessions overnight, right? So you have some time to reallocate some of that capital. I'm trying to take the panic out of it a little bit, because the inflation number needs to be really high for having immediate impact. Yes, we all see it, we feel it, but you won't lose your shirt tomorrow.
So with all the dark clouds forming over the global financial system, do you see a time when sovereign wealth funds start buying up mining company stocks so that they have basically a direct pipeline to the gold, not to sell it, but to have a direct access to it as they try to build up their gold reserves rather than dollar reserves?
Ooh, good, very great question, because I think we're seeing that to a degree out of China. And it's not they're not labeled sovereign wealth funds; they're labeled Chinese state-owned mining companies, right? That are doing that. So that are going around the world buying mining and gold mining operations, and they deliver into China, and nobody ever hears of that gold again, right? So I think we're seeing that already. It's just labeled differently. We're seeing that. We won't be seeing that out of any Western nation, in my opinion. That won't happen. I don't see us as a Western nation or Western nations install something like that as well. Like, we don't have a Sijin that goes around the world and buys up gold mining projects or gold mines and delivers gold back to the central bank potentially, right? It's more the pension funds maybe, but that has no influence over where the gold is being delivered. It's still a free market, and we still believe in a free market. It's close to confiscation. Yes, they will pay for it, but if the buyer is like, that's a tricky one. I don't see that happening. It's already happening out of the East and to a degree in Russia, but it's not happening in the Western countries. And I don't see that happening personally.
Maybe some Middle Eastern nations like Saudi Arabia might join them in that process.
I think they are looking for opportunities to spread the wealth. They're really active exploring their own backyard right now.
Yeah.
A lot of activity, but mostly on the base metal side as well. So it's not just gold. We'll have to see how that plays out, whether we're getting a taste for it. It's a bit early days to have an indication of what the real ultimate motive is. I see the Saudis or the Middle Eastern countries, the wealthy ones, the Qataris and the Saudi Arabians, they're capitalists by as well. Don't get me wrong. Like, it's not like, yes, they're trying to protect their wealth, but they're happy to buy it in the open market as well. And we've seen that Saudi Arabia just bought 160 tons of gold in Switzerland. So they're happy to buy from the refinery at the end. So I don't think they'll go downstream. Something drastic would have to happen for me to see that right now. I don't see it.
So, Kai, Bloomberg reported last week, you touched on it a moment ago, that hedge funds have increased their gold holdings to the highest level in 4 years, and inflows into the ETFs have risen for 4 straight months. What does that activity tell you?
I think the generalists are waking up. Smart money. The Stanley Druckenmillers have been positioned in gold and to gold mining stocks for a while now. But I think the generalists are picking up. ETFs is a lazy way to play gold. And if we see inflows there, we see generalists waking up. It's not just small funds, family offices. It's a generalist investor that buys funds or the ETF. So it's a good sign. We'll have to see if the September numbers shows a continuation of that trend. It looked like that in August. So it's been happening. But the beginning of the year, while gold was still at 2,000, Europeans and North Americans were selling while the Asians were buying. We have Diwali coming up in India, which is also really interesting. So we'll see if Asia keeps continuing to buy into that rally. Gold is perceived expensive right now. Perceived. If I just look at the price, well, 6 months ago it was 2,000. Now we're at 2,700, right?
Right.
So
nominally, but not inflation adjusted.
If inflation adjusted is a whole different story, because we should be trading at $3,400 or $3,800 if the calculations are correct. But the generalist starts to reallocate, and there's percentages being touted online, like whether the overall allotment of gold in people's portfolios is 0.5% or even 1% right now. But if that goes to 2% or historic averages, then we'll see an influx of money into the ETFs. And those ETFs have to buy physical. They have to cover on the COMEX. They have to buy at the LME or even in Shanghai. And we'll see the prices spike, because right now nobody's really selling. Everybody's just buying.
That could be the moment when some of those sovereigns decide to go somewhere else. So gold mining company balance sheets, they're beginning to improve rapidly as gold prices have soared, oil prices have dropped, and now additionally borrowing costs, they're set to drop as well. In your examination, what are you anticipating for the miners as gold stays elevated and oil stays depressed?
The miners have given us a case study or a proof of concept. Everybody that was a bit hesitant about the miners got a lesson, or got taught a lesson in the last 3 months. It sounds a bit aggressive. I've worded it too aggressively, but there was a proof of concept. If you weren't a believer in the mining stocks, fine, you missed the first 30% or 35%. I think GDX is up 35% roughly right now. So you missed the first 35. And if you think that's enough, that's done, everything's priced in, then stay out of it. But the miners have a lot of room to go. You just pointed out the reasons why. Costs have been flat. Oil prices have been low. They should be printing cash. And right now we have a bit of an advantage. Like, we got a week or so until we get first production numbers. And then in 4 weeks, we'll see financials. Or 4 to 6 weeks, we'll see financials from the big major mining companies. I think that the Main Street, or Bay Street, House Street, and Wall Street, they probably wanted to see Q3 numbers. But we've been saying that about Q2 as well. But that Q3 number should manifest the trend that cash flow has been increasing. Borrowing cost is quite interesting, because I'm curious if we're going to see more M&A activity. There's been a rumor at Denver Gold that there might be a bigger merger announced. Haven't seen it yet, so we'll see if that holds true. But there is activity. Goldfields buying, or Cisco. They're not doing that based on an empty balance sheet or an empty gold price forecast. Say, well, we're going back to 1,800. This doesn't make any sense, right? Because they bought a Cisco at a valuation of $300 an ounce, which was extremely high. So they must have a positive gold forecast.
Yeah. And so also, in the general stock market, especially in tech, a lot of that has appeared to have topped. And a lot of the big whales like Druckenmiller and Jensen Huang and Warren Buffett, a lot of them have been sellers, which has put some pressure on putting a lid on some of those prices. And so if that stagnates for a while and balance sheets are improving over here in the mining sector, there's a good chance some money's going to begin rotating, seeking profits.
100%. There's a lot of money still sitting in money market funds or money managed funds, and that money will seek returns as well. Bond yields are coming down. So where are they going to go? Well, one sector that's still unloved and is not seeing a lot of volume is still the mining sector, despite $2,700 gold. And that, I think, will be the next leg up for us. Like, if that money starts to move, and again, it doesn't have to be a lot. Like, we're a small industry. It's a small sector. It doesn't have to be a lot of money. If you put all the miners together, you barely get, it's not even half of the Apple valuation. And that includes like a BHP and a Rio, which are not even gold miners, right? So if you throw those in, it's a very small market space. So if money decides to reallocate, the miners will run. And that's what I meant. Like you've gotten a proof of concept. If you believe that the miners will perform okay, you might have missed the first 35%, but now there's upside because now you can see this is happening. It's rallying. There's interest in the space, and it's trickling in. It's coming.
Well, so I don't want to put words in your mouth, but you sound bullish. So for the miners. So Kai, would you share how a precious metals bull run unfolds from investments into the metal through the producers and down to the juniors, what you're expecting this time around, for this to unfold, and how long you expect the bull run to last, and then how you're investing in it?
Yeah. No, you laid it out perfectly. So it really starts at the top. Of course, everybody looks at the Newmont, they're S&P listed, and then it starts trickling down. The royalty companies have been doing well. That's a low risk investment so far, but now Newmont, Barrick are starting to catch a bit. Agnico Eagle, the world's third largest gold miner. I had to double check real quick. It's at all time highs. They just made apparently they made an offer for an Australian listed company, close to $3 billion transaction volume just late last week. So there's a bit of momentum coming into the major miners. Agnico using its currency at all time high levels, which is really smart to do, and Barrick, Newmont are catching up. So the big mining companies catch the first bit, then it starts to trickle down to the mid-tier producers that market caps around $1 billion, $2 billion, and then it goes down to the developers and the small producers. And we're seeing that happening right now. We've been waiting for a long time for the smaller companies to catch a bid. Mid-tier gold producer IAMGOLD is up over 100% already. They put a new mine into production, Cote Lake in Canada, so they're catching a bid now. They're reevaluating in the process right now. And the small juniors are catching a bit. I was in Beaver Creek at a conference with about 220 other mining companies. I was one of the investors attending, and the mood was positive. It wasn't euphoric, don't get me wrong, but it was positive. And I posted that on X and LinkedIn. Like, it feels like we're in the final stage of grief, and that's acceptance. Nobody's complained about the markets. Up until like June, the market was horrible. Everybody who you talk to complained about market sentiment in the juniors, saying, oh, we're trading at $2,500 gold. My stock is not doing anything. We should be trading 5 times higher than we are. Now there's volume coming back. There's share prices are moving. There's actually money available. Financings are happening. So some financings are being oversubscribed, and that's what we're seeing.
That's
then
exciting.
You ask, how long do I see that cycle play out? Very, very tough to answer. A lot of macro factors weighing in on that, but we haven't seen a cycle in like 13 years. So I sure hope it's going to last longer than 6 months. Like anything, like we've seen a bit of a blip of what could happen in August 2020. It was a really good market. Juniors have been flying high, and we're far from those levels. So we're not even there yet. So I'm not worried about the market overheating. And quite honestly, I hope it's 3 to 5 years, typical cycle length. We'll see how it develops. Depends on a lot of the macro factors. As I said earlier, the game has been almost screwed up based on all the money that's been pumped into the system. Who knows what's going to happen? Do we see new BRICS currency? That'll be a complete game changer anyway, because that'll change the fundamentals for gold anyway. How do I play it? I play a lot in the junior exploration space. I pretend that I'm still young. I might have to look in the mirror one of these days and figure this out. But I see the most torque, of course, there. Most risk. You can lose it all in a junior. Look at some of the skeletons in my portfolio. There's definitely some fat zeros in there, but also, fortunately, a couple 200, 300, 400% stocks as well. So yeah, I'm more on the high risk end personally, just because that's where I feel comfortable. That's where I'm professionally active. So I do have a direct line to a lot of the CEOs. That's why I don't own a Barrick or Newmont personally. Should have probably owned them because they've performed decently okay already. But my game is the junior mining game.
So is there a previous precious metals bull run that you see as a parallel to the one unfolding today? And what are your expectations this time around in terms of price levels for the metals and for the stocks from where they are today?
So professionally focused, I haven't seen one. So I've been in the junior mining space since 2009, 2010, but more on the sidelines early on, and then only started my own company back in 2011. So professionally, haven't seen it yet. So I hope, of course, it lasts forever and everybody's going to be fine and I'll get to retire on my own little island at some point, right? But 2008 to 2011 was really bullish from what we've seen in the market, based on sort of the experience. I've been to conferences when I was a young kid and very green behind the ears. Honestly, I didn't know anything about junior exploration and mining. I just saw how everybody else was doing and how the market was doing, and that was phenomenal. right? So I hope we get to those levels. It was super euphoric. Like, we've raised a ton of money back in the day. There was a lot of money flowing into the space. There wasn't any competition from like Bitcoin, weed, or anything else in the markets that took away from our sector. Of course, we've got to compete now with the cryptocurrencies, which in a digital age of 2024 almost seems logical, but it is competition for the investing dollar, or the high risk dollars, or high risk capital. But there's so much money sitting on the sidelines because we've created so much money as well that if that flows into the sector, it could outperform easily what we've seen up until then. And as I said, it could be really unprecedented. People have been saying generational opportunity. It sounds a little strong and a little too promotional and too much almost. All right, let's slow it down a little bit. I don't mind gold retracing a little bit, retracing its steps, but it wants to run. And if that happens, the mining stocks usually over exaggerate as well and could completely overshoot any price targets.
Yeah. So Kai, from their highs in the early to mid 2022 timeframe, gold and silver mining stocks got hammered, as many dropped 50 to 70%. You touched on sentiment earlier. This drop really killed sentiment in the investing space. What brings positive sentiment back as sentiment drives a willingness to invest?
Yeah, good question, because I really noticed a change in sentiment the second the Fed raised rates for the very first time back in March 2022. That's when really the risk capital seems to have disappeared. And that's more of a gut check as well. But we've seen financings decline ever since then as well. So the juniors, the really grassroots exploration companies have been completely cut off from funding in that regard. And that is changing now. We've seen a trend change. The Fed has been easing, has been lowering rates. And the second that happened, like the last 2 weeks have been quite positive in the market overall. Volume has come back a little bit. Despite higher gold prices, like volume should be absolutely like at record levels almost, but it hasn't.
Right.
But now we're seeing it come back. So that's what I'm seeing. Like, and I think that is a trend change that has me positive. And again, nobody's been complaining. It's really a sentiment check. Nobody's complaining about the market, so something is changing.
So you don't see it more as a price level that's going to drive sentiment. You see this more as with the Fed having changed their trend, their direction, that something has changed, and maybe this will pick up steam as time goes on.
Yeah, it's like the mining space has a bit of a stigma of always wasting people's capital and always making the wrong acquisitions at the wrong time and putting on too much debt. So there was a lot of trust, of course, lost in the sector as well. That's why I think that the sentiment has been so bleak on top of everything else, that the risk capital is just missing. But I was trying to make a different point here, but I lost my train of thought. I had a really good point I wanted to mention.
Basically, little by little, you're expecting, as the trend moves deeper and deeper in this positive way, more and more sentiment's going to come back in a positive way.
Yes, people will see the returns. Like, we'll need a couple success stories on the exploration side, and then it will happen. Like, one thing I want to mention, I got my thought again, as a lot of our analysts or like friends I talked to in this space as well say, oh, once we break through $2,100,
right,
we're off to the race. The sentiment is going to change. Like, there was no reason for that sentiment to change. At that point, yes, price was moving, but everything else was moving alongside with it. As you said, like inflation on the cost side, like Newmont produces now at $1,500 all in per ounce of gold, and that was 10 years ago. It was $700. So the costs completely exploded, right? So there was no reason for sentiment to change because the margins didn't change. Like, we were trading at $2,100 gold, we made less money per ounce than we did before,
right?
Than we did at $1,300 most of the time. So that's why it's like there was no reason for sentiment to change because the margins didn't change. The miners didn't make necessarily more money. Yes, revenue was higher, of course, but the cost was higher as well. So that's why
that is starting to change now in a positive.
Oh, absolutely.
direction.
No, it's like that's why Q3 numbers, I'm really looking forward to it. And I think the generalists are starting to run out of excuses why not to invest in the miners. I'm sorry to say that. I'm really positive on it. But unless we do see a change, like oil prices explode due to crisis in the Middle East and the Strait of Hormuz is unpassable, maybe, then the miners should be absolutely printing cash in the next years.
So silver has crossed some very important thresholds this year between $26 and $32. It's been in a substantial and rising deficit for the last 4 to 5 years. AI data centers, EVs, solar panels, the electrification of everything. and really the rising up of more than 1 billion people globally into the consumer class, all of these things require large amounts of silver. Demand is here to stay. However, supply is relatively flat, and there's really nothing of significance waiting in the wings to come online to change that. So supply deficits are here to stay and growing. What do you see for silver moving forward?
I'm bullish silver. Don't get me wrong. Like I've said it before in other conversations as well. Silver has been trading like a base metal over the last 2 years almost. Yes, silver's moved. It's outperformed gold by a few percent, but copper has performed as well. And if you put the silver chart over the copper chart, they're almost identical, right? Like with a few changes here and there. But my point is it's been trading like a base metal. Like, don't hate me. It's still a monetary metal. It is a precious metal. I don't deny it, but it hasn't been trading like it. The second that changes, and I think we'll change, it'll be soon, I think. Like, it's a second, like, technical level is 3250. If we jump over that, and maybe the BRICS currency will change that as well. Like, it'll put a new shine on silver. Don't know the exact reason why the BRICS would choose silver. You need way too much to back a currency with it again, but it needs to trade like a monetary metal, and then we'll overshoot the $50 all-time high easily. I'm not worried about that. Silver will definitely outperform gold. It always does. And people have been telling me apparently silver is always lagging behind gold in the early phases of a bull market. I'm sure that's part of the acceptance phase that you deal with it, but it's going to rally. Like, silver is positive, as you said, for all the reasons you mentioned. There is massive supply shortages. Just keep in mind it's a big byproduct, and if once we ramp up copper production and lead zinc production as well, there will be more silver coming onto the market. So we haven't really seen a supply-demand issue play out in the price. Like, yes, we've tried the silver squeeze a few years ago. I think that caught a lot of people off guard. They're better prepared. So we'll have to see how that plays out, but I'm uber bullish. I don't have price targets for it. Gold-silver ratio right now is completely out of whack, in my opinion, at 85. Even if that just corrects to 75, silver will move, hoping that gold doesn't come down, obviously, in the meantime. But there's lots of upside in silver.
So is there a black swan scenario that you're keeping an eye out for that could derail the precious metals bull run?
Like, we've seen a couple false starts, meaning, like, I've been duped last year by the BRICS meeting in Joburg, where everyone said, oh, this is going to be the day they announce a new BRICS currency. Maybe they take that completely off the table. Brazil says, we're done with the BRICS, we're going to do our own thing, and that's the end of that. Like, something needs to happen on the macro side. Maybe the US allows Russia back under the SWIFT system and everybody makes up. Personally, I don't see that happening, right? So I think I said in another interview, we need to see rainbows fart and we need to see unicorns fart and rainbows before that happens, right? And just looking at the geopolitical situation, gold is here to stay as a protection of wealth. They're protecting their foreign reserve, their own domestic reserves, or their own domestic wealth. I'm lacking a word here, but that's what we're seeing. The SWIFT system has been weaponized. Countries are saying, no, we're not playing that game anymore. So they're buying gold. It's the only asset that protects you in that regard. And we've seen it over and over and over again. So, yes.
So it sounds like there's really nothing that you can foresee on the horizon that you're worried about that would derail a precious metals bull run from really blossoming into what it can be.
Short answer, no.
Well, Kai, this has been a wonderful conversation. Before we wrap up here, and I ask you the final question, I want to point everyone over to our Substack. It's free. Go to metalsandminers.substack.com. We post free content on the consumer, economy, markets, artificial intelligence, individual metals and miners, and all the expert interviews that we conduct, just like this one. They're all up there. And when you subscribe, we want to give you a free gift. It's a report that we wrote. It's based on the important Ray Dalio foundational premise. It's titled, If You Don't Own Gold, You Know Neither History nor Economics. This free gift is a must-read for everyone on why we all should own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe, and receive the free gift on us. Also, I'm positive you've enjoyed the conversation with Kai as much as I have. Please let him know by hitting the like and subscribe button and leave a comment below the video. It's now time for our Golden Nugget segment. Kai, let's discuss internal management share purchasing. Something that would tell us a lot about the state of this precious metals bull run is whether or not insider executives are buying stock in their own mining companies. Are there signs of increased insider buying among gold and silver company executives?
Ooh, good question. I haven't really looked into that, but just based on what I'm seeing in the juniors, no. And I think that has various factors. Like I think it has a lot to do with the personal circumstance for the management teams. Um, I think many of them are already positioned. A lot of the CEOs are founders in the junior exploration space, meaning they've received founder shares or have been participating from early on. So it's rare to see more open market buying. There's exceptions. Like good question. Like I might have thinking a little longer about that, but in general terms, I haven't seen an increase in that activity. I might be wrong. I need to double check the data because we are seeing more increase in financings, and it's not necessarily reported in that. I do need to see some of the SETI filings. I need to get a general overview. I have to admit, I'm talking a little bit out of my behind here. Quite honestly, it's more of a gut check here that I haven't seen more buying in the juniors than we maybe should be seeing. But maybe just one anecdote is like a lot of the CEOs can compensate or get positions by just issuing options and restricted share units. So that's a different game that the juniors can play. And I haven't looked what Barrick Gold executive team is doing or the Newmont executive team is doing.
If you do find that data, would you just let us know with an update?
100%. No, I'm going to look that up the second we hang up here, Gary. So,
all right. Well, Kai, thank you for coming on to Metals and Miners and for being so generous with your time and your analysis and your ideas. It's been awesome to spend the time with you. Would you share with the viewers any important message you want to leave with those tuning in, where they could learn more about your work and how they can connect with you?
Yeah, no, I really appreciate it, Gary. It was a great pleasure to catch up with you here. And it's just the beginning. You haven't missed anything. You've seen the proof of concept has happened, and now if you were nervous about the miners doing well, wait for the Q3 numbers. If you're positive, if you read the production reports and you're positive that they're beating earnings, then it's time to get positioned. I think that the train is about to leave the station. You haven't missed it yet. I think you've got plenty of time to buy a ticket. Of course, consult your investment advisor. Be careful what you put your money into, especially the lower you go in terms of market cap. I'm usually biased towards the space. Of course, I'm positive, but I've never been as positive, I have to admit. If I would have done that interview with you about a year, Gary, I would have been way more sober, meaning not because I'm drinking water, by the way, but you catch my drift. I would have had a very different tone. So I'm really positive of what we're seeing. It's early days. I think the train is about to leave the station. If you want to follow me for more, go follow us on YouTube at youtube.com/Soar Financial. Channel is called Soar Financially, or follow me on X at JR Mining Guy.
So I've been following you for quite some time. We met back in July at the Rick Rule Symposium down in Boca Raton, but I've probably watched your work for the last several years. Folks, if you're not following Kai or Soar Financially, you need to. I will put all of the information up on the screen. Follow him on Twitter, follow him on YouTube, take in what he's sharing, listen to the guests that he's bringing on. He's deeply connected. Check out his software platform for the juniors. There's a lot going on here under the covers that Kai has his finger on the pulse. He's somebody you want to follow. Kai, I look forward to having you back on sometime soon. Thank you for being here with us, and everybody else, thank you for watching.
Thank you so much, Gary.